You know, it's a very uncertain time, and it's also very complex for our clients. Some sectors it is more complex and more uncertain, in some sectors it is not. But effectively, when you have uncertain times, technology can be leveraged for productivity, efficiency, and creating opportunities for clients to thrive in the uncertainty, and sometimes underwrite that money for innovation purposes.
Ravi, we know the first order impact of the tariffs is on sectors like manufacturing, particularly auto, the consumer retail sector, travel, tourism, logistics. These sectors are feeling the heat. But is there a risk that the second order impact, which is on other sectors like BFSI, which is so far very resilient, that will come into play? I mean, are you preparing? I mean, are your clients worried about that? And where is it that we've seen, deal cancellation or deal pauses?
We haven't seen deal cancellations so far. We have, we have had a very resilient quarter. I would say there is going to be second order impact if there is uncertainty. I mean, even if there is one sector which gets impacted, financial services will have downstream impact, and there is going to be consumer spend, which is an important metric for financial services. If you just look at software development cycles, I think the industry is going to shrink because software is going to be written by machines. One of the other pillars which Cognizant is excited about is engineering products. The last 10 years, technology was deeply immersed into services industries. The next 10 years, I actually believe technology will be immersed into anything physical, making physical products intelligent, autonomous, and connected. And that will lead to more technology. Now, if software is written by machines, because of the elasticity of spend on software, you can actually drive more.
Jatin, what percentage of your code today is written by generative AI? And what is the generative AI contribution to your revenues?
Today, we have more than 20%, a little over 20% of our codes written by generative AI. We haven't broken down the revenue contribution by GenAI, but almost every large deal that we have won, there is a significant role of GenAI. And since it is all across, we haven't really broken it out as $1 or $5 or 50 million or 5 billion, which is coming out of the GenAI number for the quarter. From a long term, we are very focused on GenAI and the opportunity that it provides, specifically in the three vectors that we have talked about on our Investor Day. Vector 1, which is productivity. Vector 2, which is AI-enabled services. And Vector 3 is really about the new addressable market that we have not looked at as IT services before. So the whole investments around that is the focus for long term. And in the current times, where the focus is around cost, is around getting the maximum bang for a buck for a customer, what can we do to remain relevant there? So this is what we remain focused on, and we prepare whenever the growth comes back.
Ravi, you want to add?
If I may just add, in fact, we are the only system integrator who has spoken about machines writing 20% of our code. I mentioned this in my earnings this time. I mentioned this in my earnings last time, and I mentioned lines of code written on the third quarter of last year. So we are industrializing this opportunity. Every new school graduate who joins us is not going to look at writing code in a legacy way. They're going to leapfrog into the future. They're probably going to write code for the first time in conjunction with machines. That's how we are seeing it. So this productivity is going to go through a hockey stick. Today it's 20%. Next time I'm speaking to you, I'm quite sure these numbers are going to change.
20% of your code is written by machines. 1 year later, you're saying this number is going to increase. What could it look like if you had to make a guess?
I mean, it's 100% going to increase, Rima. I mean, Yesterday, Satya spoke about in Microsoft, they're using 30% of the code with machines. I think this number is going to progressively grow. It's a general purpose technology. And when you have a general purpose technology, it's going to improve over time. It's going to be pervasive, and it's going to spawn downstream innovation. So I will not be surprised if you want me to make a guess. I'll not be surprised if 50% of the code is written by machines. But remember one thing: writing code is not the only thing tech services companies do. We do a lot of activities around it: scoping projects, designing projects, integrating code into enterprise landscape. So there's a lot of work around it.
That's very well put, Ravi. Jatin, just one final question. You said generative AI, the first vector it's predicated on is improving productivity. Can we expect higher margins for Indian IT companies, for the industry as a whole, or do you think the extra productivity is going to be reinvested to tap into the new frontiers and margins should be steady?
I think this would be fundamentally both. You would see some of this is going back to customer in form of a superior value or superior price point, and some of which will get invested back into Vector 2 and Vector 3 capabilities. And we have spoken about a $3 billion investments over a period of 3 years, combination of organic investments plus inorganic investments. So some of that will go back into that. And even today, we have a large AI lab that is part of our operating expenses, which is really working on the next frontier of what we can offer and what we can execute for our customers. So it's a combination of both.